So hello everyone, today we'll be having a session rapid revision on the introduction of costing, the first unit of the CMA Inter costing. So this introduction of costing will have a precise look on covering all the aspects of the study material in the sideways, in a precise and crisp way, in exam oriented way too. So looking over to that first part, when we come into that meaning of the costing. So what does costing mean, or what does cost mean? So it is an expenditure incurred for producing a product or rendering a service. It is an expenditure incurred for producing a product or rendering a service is what costing called as. So for example, take Mr. A is having a furniture store. So whatever expenditure that he incurs for producing this wooden chair is the direct cost. It's called the cost incurred. The expenditure incurred for producing the product is called the cost. Okay. So whatever the charges that he takes to bring that goods from Bangalore to Chennai, whether if his factories in the Chennai, the fuel charge, the labor is directly attributable to bring the raw materials to the factory. That is direct charges. Okay. These are also the expenditure incurred for that. All the direct, indirect expenses incurred, expenditure on a whole, expenditure incurred for producing a product or rendering a service is called the cost. Okay. So looking over to the definition of what the institute material says. So cost is defined as an expenditure, actual or notional, incurred or attributable to a given product or a service. So discussing what is the difference between the actual and notional. So actual expenditure. So for example, manufacturing the same chair, for the wood you would have incurred rupees 600, for the labor you would have incurred 250, for the glues, gum, binding, everything you have incurred rupees 50, for the machines, running of the machines, everything you would have incurred 100 rupees. Okay, now the total for the cost of the whole product is 1000 rupees. This is the actual expenditure that you have incurred. Okay, but what is notional expenditure, notional cost or expenditure cost? These are the expenditure which you should have incurred. You should have incurred. Okay, but due to the non-movement of cash, you don't consider it. Consider it in financial accounting. But should be considered in cost. Okay, a simple thing. With an example, Mr. Mr. A is not having a factory. So is Mrs. A, which she donates her own land to build the factory, or she is having a go down type structure. She says her husband use that factory for the purpose of manufacturing that chairs and wooden tables. Like how Sudhamurthy ma'am had given 10,000 to Narayan Murthy sir for building the Infosys like company. In the same way, Mrs. A also gives a factory to manufacture chairs and wooden furniture. So as Mrs. A is the wife of Mr. A, she says that you don't pay me any rent. Okay. So now Mr. P does not pay any rent. So now he is happy because his cost of the furniture is 1000 rupees. But whereas Mr. Z furniture, his cost of the furniture is 1800. He is happy, but I am able to manufacture the whole of the furniture at 1000 rupees, but Z is incurring the cost of 1800. So when they sell the product at rupees 2000, so what is the profit that Mr. E incurs? Rupees 1000 rupees. So what Mr. Z incurs? That is rupees 200. So now Z is happy or A is happy? Looking into that, actually A looks happy, but A had to pay taxes on rupees 1000. Okay, this is not a right representation of the cost sheet. Okay, there are certain norms and conditions to be followed. but he should incur the expenses which he should have incurred. Like he should consider it. He should consider the expenses which he should have incurred, even if he is not paying that expense. If he had taken the factory from outside, if he had taken the factory for rent from me, if he had taken that rent, he should have paid that 800 rupees rent. If he is not paying that, he should recognize that in the cost sheet. Maybe he does not recognize it in the financial accounts, because there whatever comes in, like basic rule of the debit and credit, what comes in, what goes out. Okay, the same way here the cash does not go out, nothing. You cannot just put a notional expenses over in the financial accounting. It does not mean that you should not consider in the cost sheet. In cost sheet, you should consider both the actual and the notional expenses. Okay, here the definition goes: the expenditure which is actual and notional is for the producing a product or rendering a service is cost. So costing. So what is costing? Ascertaining the expenditure incurred in the product. Okay, for that it is a cost. Costing is a technique, a process, a method. Ascertaining a cost is costing. Okay, a technique, a process, a method of ascertaining a cost is costing. So what is cost? Ascertain the expenditure of ascertain the expenditure incurred in a product. In a simple way, okay, here getting back to this. Okay, how do you ascertain this? For wood it is 600, for labor it is 200, for glue it is 50, because you are using certain techniques, certain process. Okay, to certain machine. How do you calculate the electricity used by machine? So you will calculate by using a technique, like for per day you will use 200 units of electricity. For machine it is actually using your 50 units. So that is a technique and process to calculate or appropriate the portion the cost required. So this technique or this process or method of ascertaining the cost is called costing. Okay, on a long way, technique, process, method of ascertaining a cost, the expenditure incurred on a product. Okay, I'm sorry, technique, process, method of ascertaining expenditure incurred in the product is costing, the long term. In simple words, technique, process, method of ascertaining a cost is costing. So now coming to what is cost accounting. What is accounting? Removing this till here. So what is accounting? Recording, classifying, summarizing and presentation of financial transactions is accounting, right? Recording, classifying, summarizing of financial transactions is accounting. But cost accounting is recording, summarizing, classifying and summarizing, and always allocating a portion of cost transactions is costing. So what is recording? Recording a cost journal entry. What is classifying? Posting it to the cost ledger. And what is summarizing? Cost P&L and trial balance, cost trial balance. So allocation of and absorption of allocation and appropriation of the overheads. So this whole makes the cost accounting. Okay. Now in the definition way, the process of accounting for a cost, it deals with recording of income and expenditure and reporting of various costs is cost accounting. Cost accounting is a process of accounting for a cost. Process of accounting for a cost, that is recording, classifying and summarizing. It deals with recording of income and expenditure and reporting it. Classifying and summarizing you report that of various costs. That is cost accounting. Now there is one more, cost accountancy. So what is cost accountancy? Cost accountancy in simple words is costing plus cost accounting. Costing plus cost accounting. Costing is techniques, procedures, methods used to ascertain the cost is costing. What is cost accounting? Is a process of accounting that cost. Process of accounting that cost is cost accounting. So in the whole, costing plus cost accountancy is costing plus cost accounting is cost accountancy. Even the definition of the study material also says that is defined as the application of costing and cost accounting principles, methods and techniques of science, art and practice of cost control to ascertain the profitability in the presentation of financial information for the purpose is called cost accountancy. Now what is this science, art and practice? Okay, science, art and practice. Okay, cost accountancy as science, art and practice. Science, because it is systematic body of knowledge and having certain principles of cost and cost accountancy. So that accountant should follow. You have certain order how you need to prepare a cost sheet. You have certain format. prime cost, then overheads, everything. You have certain rules and regulations. You have cost accounting standard for each and everything. You are bound by such a systematic body of knowledge. Okay, it is not like you can do anything, you can do prepare your own cost sheet. No, you have certain rules and regulations. So it is called the science. Why it is called the art? The principle that they need the ability and skill for being a cost accountant. That is the art. And the practice, continuous effort of the accountant in the field of cost accountancy is the art. So on a whole, cost accountancy is a science, art and practice involved. So going over to the definitions. Yes, it is an academic discipline of cost accounting. It is defined as application. It starts from here. The application of cost and costing and cost accounting principles, methods, techniques, science, art and practice of cost control and ascertaining the profitability as well in presentation of information for the purpose of managerial decision. So this is cost accountancy. Now looking over who are the users of the financial information, that is cost financial information. There are two types, internal and external. Who are internal? Internal are the managers, shareholders, employees, creditors. External are the potential investors and the government. So this is divided into users of financial information. But here you need to keep in mind that users of financial information, okay, financial information, that may be either P&L or balance sheet. This financial information may be used by internal and external, but for the cost accounting data, cost information is primarily used by the management. Cost account is primarily used by the management, not the outside. So being a shareholder of any company, do you have the access to the cost records? No, not actually. You have access to look into the P&L and balance sheet of the company. So being the cost users, being the stakeholders of the company, you don't have access. You have access to the balance sheet and financial information, but not to the cost information. So probably this will be discussed more in the management accounting. Okay. Next one is the quality of the financial information. So always it is important that the quality of the financial information is very important. Sometimes because this financial information, this cost sheet or P&L balance sheet, everything is not just done for simply like on a name way, but it is done on a purpose, because we want to make good decisions based on that. We want to look how the company is working. The financial statement is a representation of the health of the company. So looking over all these factors, the quality of the financial information is very important. Okay, now next part is looking over the objectives of the cost accounting. So what are the objectives? Main purpose of cost accounting is to ascertain cost per unit basis. So why? Because you get a whole amount of like total cost expenses I incurred for production of this water bottles is like something 2 lakh rupees. Okay, but how are you going to ascertain it? When you are going to sell the bottle, are you saying I incur 2 lakh, give me per bottle you give me 2 lakh rupees? No, that is the thing that you cannot do. So you need to apportion between how many units produced, that is 1 lakh units, that is 2 rupees per bottle or something. So it's the same way, this is an example. So you need to apportion cost per unit basis. So you need cost of objectives, like that is the main purpose of cost accounting. Fixing a selling price, obviously when you get the cost plus profit, you get the selling price. Okay, so to get this cost only, you need cost accounting. So main objective of cost accounting is to determine selling price, so that you need cost. Okay, next one is cost control and cost reduction. Cost control and cost reduction. A small example, cost control. You find any variances, you put a target of your total cost should be 2 lakh rupees, but you incur 2.25 lakh rupees. Okay, so the 25,000 rupees excess you have incurred, that is a variance. Okay, you implement certain techniques to reduce that variance. But why this cost accounting is important? Because you need to know both the actual cost incurred and the budgeted cost. To make this budgeted cost, you also need cost accounting techniques, and to calculate the actual costs, you need cost accounting techniques. To find the variances also, you need cost accounting techniques. So to implement the cost control, you need overall cost accounting. So cost reduction is in a long term basis. You slowly try to reduce the cost, okay, but cost control is on a basis like you have a certain target. I need to achieve that target. I'll implement any technique. Maybe I'll reduce the quality of the product, I'll remove certain items, I'll remove certain process. Okay, that is cost control. Cost reduction is implementing certain techniques on long term. On long term, you implement certain techniques to reduce the prices. Okay, cost control is to achieve the target, you are putting some control measures. That is cost control. Okay, then ascertainment of cost between various division wise, then activity wise analysis of profitability, because when you don't divide per unit or something to per division, you cannot even give better decisions. Okay, to ascertain between each division like purchase division, manufacture division, storage division, or like even if you take a car, the components come from various, the wheels, the back, the engine, everything. So that division wise if you do, you could take a better decision. Okay, if you take on a whole, I am getting this much cost, but you know from which division you are getting that excess cost, right? If you allocate division wise, it will be easier for you to make decisions. So this division is increasing the cost, so let me implement some controls over that. Okay, this activity is increasing the cost, everything. So accounting for wastages and inefficiency in the production. So when there are certain wastages, you need to account for that. If you don't account to that, okay, you may feel like, oh, today 1 kg of waste, okay, tomorrow 2.5 kg, oh, it is 1.5 kg more. If you leave on like that, it will be accumulating that you are losing a lot of money. You are loading a lot of money on a whole sum. So a month you will lose around 25 to 30 kgs, which you could have sold for around 1 lakh rupees or 2 lakh rupees. So you need to account the wastage and inefficiency in the production process. You need cost accounting. Okay. Then last one is, we have discussed all this relevant decision making by the management. I have written it little short. You have little extended version in your study material. This much part is enough for the exam. Like, but remember this keyword. These are the keywords. Don't write in too much on your own words. Try to. I made it so simple. You just by heart over this thing and just add 2 or 3 sentences, 2 or 3 words to make it like a sentence. Look like a sentence, or give an explanation for this. Okay, this is how it works. So what is this cost accounting scope? A scope of computation, to till what it is limited. It is limited to bookkeeping, cost bookkeeping, maintaining the records. If you don't maintain the records, it is not easy for you to make decisions based on that. Ascertainment of cost. So per division, for that job, certain job, services, process, you are ascertaining that cost functions. So you need to account for that. Analysis is budgeted cost and fixation of responsibility centers. And like you need to analyze whether the cost is increasing, why it is varying, why the variation is happening, everything. And cost comparison, like your company is increasing higher cost, your the other company is increasing a lower cost, but to account that you need to have a cost sheet, or you need to maintain the cost records. But or else, unless and until you don't mention the cost record, how will you compare the cost records with their company, right? Only for comparison purpose you need a uniform based cost accounting, like cost sheets or measurement analysis. Cost control, we have discussed in detail just now. Like to implement the cost control, you need to account for standard, you need to fix a budget. To fix that budget, to calculate the budget, you need cost accounting. To calculate the actual cost incurred, you need cost accounting. So for this this purpose, you need to implement any variances between the standard cost and the actual budgeted cost. You need to implement the cost control. So cost reports are always the ultimate function why of the cost accounting. Has profit and loss, balance sheet, trial balance, these are the ultimate reports. Why? Because nobody has access to your books of accounts. They just want the whole summary, all summary based. Okay, this is the total sales. Do they ask month wise sales? No. Do they ask product wise sales? No. They want the whole sales. This much is the income, this much is the expenses, this much is the profit. So on a whole, report is important for the purpose of cost audit. So whenever there are variances, whenever there is an audit procedure carrying out, you maintain a record. It is easier for them to find out the deficiencies. It is easier for them to correct the mistakes, anything, loopholes, anything you have. So what is cost accounting systems? The first one is historical cost. Historical cost is the cost that is already incurred buying of an asset. Okay, that is already incurred, you can't change it. Okay, in a systematic manner or something. See, it is like post-mortem examination of the actual cost incurred. Okay, now you cannot put after you buy the asset. Oh, I should not buy that asset. You cannot make any decisions for that in that. Okay, it will be late to make control. You have already incurred that cost. Okay, in historical costing, you have already incurred that cost. It was already done. No more further decisions to be made on that. Okay. Next one is absorption costing. Under this absorption costing, each fixed and variable units are absorbed by certain activity, that is absorption costing. Now you incur certain expenses for electricity, certain common expense, that is apportionment. Whether that expense is incurred, I mean absorbed by that function is absorption costing. This will be studying more detail in the overhead lessons. Okay. Next one is direct costing. So the cost that is directly implemented to that, like you can ascertain whether that cost is incurred in that. So that is direct costing. Those costs that vary with the volume and variable and direct cost, like direct material, direct labor, direct manufacturing. Look, this is the remote that I have. You can ascertain that this plastic is used. This is a direct material. But you don't know there are certain circuits, wires, and certain chips and transistors, because you don't actually see into that. Okay, on a whole, these are direct materials. There are certain indirect materials too, certain glues and screws and nuts and bolts. These are indirect materials. This you can't just look into that. Okay, and you can feel that, like how the craftsmanship of making this smooth remote. There is a work of a labor involved. That is a direct labor. But the person who delivers it to you is indirect labor. Okay, he is not responsible for making this perfect product. He is responsible maybe to deliver it to you. Okay, standard costing is a certain standard, like rather predetermined cost. You set a standard for the cost to be incurred. Okay, this also we will be having separate chapters and we will be discussing on that. Uniform costing. Uniform costing is, now for example, Kia has entered few years back, has entered India, and Kia, they opened Kia India. So what is the method of costing they adopt? They look into whether Tata is adopting which method of costing, Maruti Suzuki is adopting which method of costing, on a similar adoption of identical costing principle. The reason being, they can compare between each other if there is any, so for a valid comparison, if there is any difference between them. So for that point of time they implement that, so we need require uniform costing. So next, installation of cost accounting system. Look into that. When you are implementing a cost accounting system, you need to look into the size of the firm, how big the firm is, whether you need or no need. For a small firm, it is not usually implemented and not usually used. But if you want to do that, it incurs extra expense for you. Okay, manufacturing process. Rather than most of the manufacturing industries, it is good. Okay, you outsource the product and you bring it and just label it. You do not require a costing process. Okay, you manufacture from the raw material, you convert it into the work in progress to the finished goods. You would require a manufacturing process, I mean cost accounting. So nature and number of products you produce yearly 1 or 2, do you require the cost accounting system separately? No. Like Rolls-Royce cars, they manufacture a very few number of cars, but Toyota, they manufacture around 13 hours, they manufacture one car. They do need implementation of cost system. So management control needs. So management need to control the, like implement certain control procedures. That time they need a cost accounting system. So raw materials. So raw materials incur a huge waste usually. So to allocate that, like when they are incurring a lot of waste, they need to account for that waste, everything. So for that, cost accounting system is needed. So when I said, if you outsource a manufacturing unit, it is not required, cost accounting is not required. And organizational structure, so it depends on how the organization movement takes place, how before implementing you need to look like whom you should you are accountable, everything, and in other external factors dependent. Now let us discuss about here the main part is, you need to, whenever the question is asked like what is the installation of cost accounting system, you need to remember this few keywords like by heart on the size of firm, manufacturing process. Don't try to write on the own words, because these are the ones which carry the marks. Okay, side headings are more important. Then put on relevant stuff in the sentence. 1 or 2 lines is enough. Okay, limitations. So what are the limitations of cost accounting? It is, first one is, it is expensive. It's obviously cost accounting is expensive, because you need to hire a cost accountant separately. Okay, implementation of cost accounting system is expensive. Yes, because you need to hire external cost accountant, and you need to buy a new software, everything. So it becomes experience. So difference in the cost records and accounting records requires reconciliation statements. So always, as I said, we discussed about notional cost. Okay, we discussed about notional cost. Yes, always differ. The cost accounts and financial accounts always differ. So we discussed about the notional cost, that we don't include that in the financial accounting. So there is a difference between that. So you need to prepare reconciliation statement. So different, then third one is different views by the different accountants, different person. So everybody has their own opinion. So this leads to misunderstanding between that. So cost accounting implementation is whether like that should be cost like directly production cost, or this expense should be allocated to this confusions create a lot of messy this. Then classification of cost. Then next one is lack of exactness. So we don't get exact value for lot of things. Okay, while classifying, maybe we change the heads, or we don't get the correct cost required for that, materially issued, everything. So we don't get the exact data every time. Okay, hence cost record. These are the few limitations of the. So going to the next chapter, important cost terms. So out of pocket cost expenses. Out of pocket cost expenses, that is whichever expenses you have incurred like in the purpose of cash. Okay, cash outlay, wherever like you go to purchase certain raw materials, you pay for the labor, these are the out of pocket expenses. But when it comes to depreciation and certain interest or other this is what these are not the out of pocket expenses. So it is usually important during trade recession, make and buy decision. Okay, I'll explain with a small example. So now you want to you are manufacturing Pepsi. Okay, now you want to manufacture Mazda. Okay, you have the same machine. Where just you need to train the change the ingredients you put into that. It will bottle out, fill it, and put it out. So now here the depreciation on this machine is irrelevant for you. Okay, the relevant things for you to make the decision. Maybe for PepsiCo, you need to use water and certain flavoring agents and aerate like chemicals. Okay, for Mazda you need fruit extracts and water and certain chemicals. Now this fruit extract is expensive, so you can't reach the target of 10 rupees per 200 ml bottle. So here this cost are out of pocket, which you pay in the cash terms, is relevant for you for making the decision, not the depreciation of the machine. This you should incur every time, like whether you use that machine or you don't use that machine. This is not relevant for you. Okay, during the time of recession, why out of pocket expenses is important? Because that time at least you should be able to fix the price that you are able to recover the out of pocket expenses. Okay, it's fine you don't recover the depreciation, but at least minimum price you need to set during the trade recessions or recession in the economy. You need to account for out of pocket expenses. So during trade recession, price fixation and make or buy decision, you need out of pocket expenses. Economic cost, it is same as opportunity cost also. So if you lose like if you replace any other activity, or if you're like you wanted like you were sleeping in the house, you could have gone and completed a course or completed one lesson, that would have given you better return. Okay, or you would have gone and so done some internship activity in 2 months instead of enjoying your holidays, you would have earned then 5,000. That's losing of 5,000 sleeping in the house. That is the opportunity cost. Economic cost and opportunity cost is same. Okay, next one is sunk cost. Sunk cost, have given a very good example. Now you open a Hotstar account, 299 per month, for 5 devices, mobile, telephone, TV. You use it for one device, you use it for 3 devices. That is not very important. The cost is already incurred. The cost is already incurred. Okay, the cost is already incurred. It is irrelevant for making decision. It is already sunk down. You use it for one device, you need to pay 290. You use it for 5 devices, you need to pay 2 devices. The decision should be taken whether I should buy extra 2 devices or not. That is the decision making. This is irrelevant. No need. I don't know what I have to pay it. Okay, this is irrelevant in sunk cost. Okay, this is irrelevant. So sunk cost discussing it is irreversible incurred and cannot be considered for relevant to make decision. Sunk cost is irrecoverable. You have to pay, and it is not relevant for making the decision. So imputed cost, it is the notional cost that is generated internally. You own your own building, you don't pay rent for it. You pay rent for yourself unless you have it is separately given. It is a company, you pay it to the director. But unless and until it is your own, if it is in the name of the company, does the company pay rent to itself? No. But for the cost purpose, you need to consider this. That is the imputed cost. Relevant cost. So relevant costs which are relevant for making the decisions, only relevant to that product. Okay, you manufacture a bottle and you put the cost of some other expenses like juice expenses or something. Only the costs that are relevant to that should be implemented, and avoidable and unavoidable cost. So costs which are avoidable by you by putting some measures or control, you are avoiding that cost. Okay, that time that is avoidable cost. Unavoidable cost, you put anything like evaporation of water. Now you keep the water like petrol. So sometimes certain amount of petrol will be evaporated. You cannot stop it in many measures, but you can prevent it from leaking out. You can get a better container, good quality drums or something from the oil getting leaked out. Okay, but some part of oil will be evaporated. You cannot stop it. Okay, that is controllable and uncontrollable cost. Okay, where certain managerial supervision is needed, you can control the cost. When a non-controllable cost is, there is no subject to control, like you cannot control that itself. Okay, cost object is you need to incur separately cost for that. For a product you need to account separately what are the cost incurred. Okay, manufacturing cost, labor cost. So this is cost object, where cost of something, that something is called cost object. The same way, like cost object is the example like product, service, center, where you have to calculate the cost for it again. Okay, that is the cost object. Okay, now cost center. So cost center, it is responsible for collecting the cost. Okay, they are responsible, they are incurring a lot of costs. For that I had given a very good example of yes, being a CMA, you join a big 4, you are a revenue center. You join FMCG, you are a cost center, because they just need to pay salary for you. You don't bring any income to the company. Okay, you just accumulate the cost in the company, but you do not give any. Okay, they just collecting place for cost. Okay, they are further analyzed. Okay, whether too much cost expense center, that you are responsible only for the cost. Okay, that's why too much cost is accumulated in cost centers. In production, service or functional activity, accountants, finance department is cost, selling department or marketing department is revenue. They are responsible to bring revenue. So their target is like bring 1 crore revenue. Your target is to sell this much. So they are responsible for sales. So here we have this responsibility center, that is cost center, profit center, investment center. So cost center, airline reservation center, Indigo puts its own small office. He is responsible for the salary of the employees and also the revenue he collects. So his center is profit centers. Investment center is responsible for making the decisions. He is the one who decides like whether I should buy a new building, whether I should put a new product line, everything. So revenue center. So you being an employee of any company, like or as a consultancy firm, as a cost consultant, you are the revenue center for KPMG and Ernst & Young, Ernst & Y, like this EY. because you give the cost consultancy to your clients, they bring you the money, you are the revenue center. Okay, and cost center, you just incur the cost. Like for example, in this tuition center, teacher are the cost centers because they just are expense, like they are incurring, the company is incurring expenses because of teachers, but they are getting the revenue because of the students. Okay, this is a responsibility center. Cost unit. Okay, cost unit is a device for the purpose of breaking up something in smaller divisions. Say per unit of product, like this much is incurred, this much is incurred, that for that purpose unit, like each product subdivisions is cost unit. Like now for example, your Maruti Suzuki, your cost unit is like Vitara, Bereza, Alto 800, per unit you are allocating the cost. Okay, yes, car manufacturer, a particular brand, cigarette packet, a particular pack of cigarette or piece of cigarette is responsible. Builder, particular flat, these are the cost unit for you. Okay, then composite cost unit. So this is the manufacturing industry, but when you come to the service industry, okay, when you come to the service industry, yes, fine. Okay, when you come to this, okay, when you come to the service industry, you can't measure the cost per unit. How many units of patients coming to the office, like that you will say, no, number of patients. No, it is like you have separate accounting system for that. That is patient per day, ton per kilometer for transport and flight. That is, you'll be discussing this in the operating costing lesson. Okay, cost of production. Cost of production is simple one equation that you have in the below. Materials consumed, cost of material consumed, that is prime cost plus factory overhead is cost of production. Prime cost is cost of material consumed, direct employee cost, direct expenses. This is production overhead, quality control. These are all this. What cost of admin cost is, factory overhead is cost of production. Okay, factory overhead is production overhead is cost of production. Conversion cost, you bring a sugar cane. Okay, raw material, you incur ₹2 for this. Then you make sugar around 200 grams, that is 35. From 2 to 35, not 35, 15 probably, yes, 15. From 2 to 15, extra 12 rupees you incurred labor, missions, electricity. This labor plus machine is whatever incurred is the conversion cost. This ₹12 is the conversion cost. You get it? Overhead cost, that is something, anything indirect cost, any indirect cost, indirect material, indirect labor, indirect expenses. These are all overheads. Indirect material, indirect labor, indirect expenses. Okay, which are not economically identifiable. When you look at gold chain, what is the most like first thing, you direct material that you are able to ascertain is the gold chain. That gold is used in that. So there will be certain strings of silver used or to join that chains. So these are not economically identifiable. Okay. Now coming to the third unit, the elements of cost. In the elements of cost is divided into three: material, labor, and overheads. So this material, each material is divided into direct material, indirect material, direct labor, indirect labor, direct expenses, indirect expenses. So this direct material is ruled by cost accounting standard number 6. Direct labor is cost accounting number 7, cost accounting standard number 7. Direct expenses cost accounting standard number 10. And this overheads is ruled by the cost accounting standard number 3. Okay, so these are the element of a cost. Each cost unit has a material, a labor expenses, and overhead expenses. Okay, each cost unit. Okay, this material is divided into direct, indirect, direct, and like that is direct labor and direct material, direct expenses, indirect expenses. The reason being, when you divide this, you can ascertain where the expenses incurring too much. So it is relevant for you to make decisions. So direct material plus direct labor plus direct expense is equal to prime cost. Okay, direct material plus direct labor plus direct expenses is equal to prime cost. Whatever the indirect expenses, indirect materials and indirect labor is equal to overheads, and this overheads is and comes under cost accounting standard number 3. Okay, cost accounting number standard number 3. So here, so the fourth unit that we are going to discuss is the classification of cost. Classification of cost comes in the cost accounting standard number 1, and is divided into two: subjective nature and objective in nature. Subjective is like it is based on the nature of the cost that has been incurred. So in the cost that is divided subjective and nature, based on the nature of how the cost is incurred, how the cost is actually applicable to the unit. Objective, the purpose for which this cost is used. So dividing the cost, we have 5 variants which we divide the cost into. First, based on the nature of the expenses. So based on the nature of the expenses that we incurred, we divide it into material, labor and expenses. So material which is used for production and rendering the services. So in the nature it is used for the production. So that is why that is divided into 3 heads. How do you divide, classify the question comes, like classify the cost based on the nature of the expense it is incurred. Whether it is in the nature of material, whether it is in the nature of labor, whether it is in the nature of expenses. So whichever nature it is depicting, that nature you should actually record it. Okay, I mean you are classifying it. So material used for the production and rendering the service, that is on based on the nature. Labor, then employee benefits paid for the people of the employees, that is the labor expenses. And expenses is anything other than material and labor which are attributable to the production. That is in the, you are attributing the expenses in nature of goods. Next comes the traceability. Traceability, the element and what you call responsibility, not responsibility, relationship. Sorry, relationship. Okay, you can put it down. Traceability, element and relationship. How it is related, directly or indirectly. So that I have given a very good example. You have palak paneer. Okay, you have palak paneer, right? So when you make a palak paneer, in a bowl of palak paneer, what do you look? Green color, gravy type structure with palak pieces on it, right? So as soon as you see 2 items, like you can ascertain that there are 8 pieces of palak paneer in the bowl of palak paneer, right? So you are also able to ascertain there is some amount of palak also grinded and made into gravy. So these are direct materials. You directly able to trace it down. You can directly able to ascertain the relationship between palak paneer. So there is palak and paneer. You can directly see, but you can't see the spices. You can't see the salt amount, how much it is used. So it is indirectly related. You can't understand what is the amount of oil and ghee it is used. But you can ascertain what is the amount of paneer pieces you have. Okay, around 8 pieces of paneer I found it. This direct material. 200 grams of palak probably may be used. So you can ascertain the salt used in it, but it is not directly attributable to the product, right? So now if you look at remote plastic and the rubber that is being used here in the front. So these are the 2 things not directly ascertainable, but there are certain costs that you can't see it directly. Certain plastic items that are inside the circuits, the transistors, the PCB board, everything. In the same way, salt, spices and oil and ghee, these are the indirect materials which are not directly visible for you. But direct LPG gas, you know, you need some expenses to cook. The fuel you need, that is a direct expense. Okay, you need fuel to cook. How will you cook palak paneer without it? Whether you keep it in the sun and it would automatically be cooked? No, you need, this is a direct expenses. You can attribute, probably they have used certain fuel, okay, or electric steam, anything, the fuel used. Okay, next, when the palak paneer is come and served to you, you think the cook has made the best taste. The cook has used, like that is the, what you call, the specialist. There is like Nala Maharaj in Mahabharata, like his expertise in making that. That is labor work you can see in palak paneer. How well he has decorated it. How well he has put that cream on the top palak paneer. It's looking so beautiful. How well he has roasted that paneer. So this is the direct labor. You are able to attribute his craftsmanship in that food, palak paneer. So this is direct labor. But the person, the waiter or delivery boy who brings, he's not responsible for making the palak paneer, but he's responsible for delivering you the palak paneer. So is indirect labor. Is indirect labor. So this electricity used for the light in the kitchen, okay, for fridge to store this vegetables, these are indirect expenses. It is not directly contributing to make the palak, but it is needed. It is needed, but indirectly. Okay, you are going to trace this. You are going to trace this. Okay, that is based on traceability. Direct cost, cost directly attributable. Direct material, direct labor, direct expenses. Indirect cost, cost indirectly attributable. Indirect material, indirect labor, and indirect expenses. Okay, next, based on the function. So there are certain functions that you incur in the mobile cost. So certain functions you incur for the production, that is supervisor salary, okay, salary, workers wages, power to run the machines and generator. These are the production expenses. You want to classify the expenses based on the production. You can't put power of manufacturing into the distribution. Why will you put that? You can't put that. Okay, so you need to ascertain the cost required for dependent on the basis. So next comes administration. This is office salary, office person salary, marketing manager salary, okay, other expenses like CEO's MD salary, AC running expenses, office rent. So these are all admin expenses. You can't put office rent in the production. Do you need office to produce? You need a factory to produce. You need office to run. This is administrative expenses. Selling expenses, advertisement expenses, then seller's commission, agent's commission, seller agent commission, then distribution. Okay, delivery, transportation charges, okay, delivery agent's commission. Okay, these are, you cannot attribute to delivery agent's commission to production. It is not to, so you need to classify the cost. It will be helpful for taking a decision. So you can see my distribution cost is increasing, maybe I have to shift for other process. When you ascertain these things, it becomes easier for you. Next comes research and development. So products used, certain materials used for research, then researcher salary. Okay, these are the things that you incur. Okay, now coming over to the next one, based on behavior or variability. Okay, behavior, how does it behave? The fixed cost, variable cost, and semi-variable cost. About this analysis, I will be just discussing the next point. The cost is always fixed, and fixed cost will be detailed analysis. Now let us just know the behavior and variability. Three costs comes: fixed cost, variable cost, and semi-variable cost. Okay, the next very immediate topic is behavior analysis of the cost. Okay, next one is production and operating. Did I miss anything? No. Okay, production and operation process. So here we divide into 4 units: batch costing, contract costing, process costing, joint costing. So in batch costing, each batch of biscuits, they put a batch of 100 kg of wheat kilos, then wheat flour, sugar, some milk, so that you get a glucose biscuit outside. Okay, then you have around 400 packets of Parle is ready now. Okay, this is one batch. Okay, the whole cost incurred, 100 kgs of wheat, the labor, the power, everything, the whole batch you need to put into that batch only. That is batch costing. Contract costing for per contract. Okay, on the basis of contract is like building an apartment. Okay, building building a ship, everything. So these are based on the contracts. Process costing, certain cost you incur in process, and each level of process you need to incur certain cost. So here we have example of Nandini, Karnataka Milk Federation, the milk packets that you get, that organization, they acquire a milk for ₹1 and the cost of acquiring the milk is ₹2. Okay, then they transfer this to the curd department. They can even sell it on the open source. Okay, like open market, they can sell the milk for rupees 2. This is an example. So they transfer it to the department of curd. Now they transfer it to the department of curd for rupees 2. Rupees 2. Okay, now the value of the curd is rupees 3, which includes the cost of rupees milk, which includes the cost of milk, that is rupees 2. So 1 rupee is the cost of additional cost, conversion cost, that is incurred by the curd. Now the butter curd department transfers it to the butter department. So the cost of butter is 5, but includes the cost of curd of rupees 3. Each level of process, it adds the cost, like you acquire the material from the previous department, and you add certain process to make it a new product. Okay, that conversion cost includes the product of the previous, because you have added separate accounting for this, a lesson only for this. So each butter is divided into buttermilk and butter. You can even sell it. This is a joint product. Okay, then if you transfer it to the ghee department, you will include 5 rupees butter. Okay, this ghee department includes 5 rupees butter, only 3 is the conversion cost. Okay, this is the process accounting. We need to look into detail in this. So joint cost is incurred probably in the petroleum industry when transferring of crude oil into petrol, diesel, everything. So coming on the next topic that we are going to discuss is cost behavior analysis. Cost behavior analysis, just now we had said behavioral analysis, that we will be discussing in detail. So the behavioral analysis is based on the variability of the input of the activity undertaken, how the activity undertaken affects the variability of the output, like price. Okay, now looking at the fixed cost, it is also referred to as period cost. So it is incurred for a particular period. The fixed cost is incurred for a particular period. Okay, and it does not vary with the change in size of the activity. You incur monthly around 2000 rupees electricity income. Okay, electricity prices, not electricity, certain fixed like rent. Okay, now you have a house, and you incur 3000 rupees rent. Now only one person you are living. Now your mom and dad comes and lives for around 15 days. So now 3 person have come. Whether the rent will increase? No, the rent will be always 3000 rupees only. It is fixed. It is fixed. Okay, it is fixed. So now it does not affect you. With the increase in the people users, the house users, number of people, again 2 people come, your cousins come, whether your house rent will increase? No, it is fixed. It does not vary with the change in the volume of the activity. Okay. Then fixed indirect cost form a part of fixed overheads. Just remember, fixed indirect cost form a part of fixed overheads. Here the main thing you need to remember, total fixed cost remains same. Total fixed cost remains same, but the fixed cost per unit reduces. Okay, with the increase in the production. Now 100 rupees is the fixed cost. 100 rupees is a fixed cost. Okay, now you produce 10 units, rupees 10 per unit is a fixed cost. You produce 20 units, rupees 5 per unit is a fixed cost. You produce 25 units, rupees 4 per unit is a fixed cost. With the increase in the production, per unit fixed cost is going to be reducing. This is usually has the multiple choice, fill in the blanks, everything. Okay. Cost is unaffected by any level of activity. Okay, total fixed cost is total fixed cost. Total fixed cost is unaffected by any level of the activity. Okay. Onto the graph, the total fixed cost remains same. Total fixed cost remains same even if you produce 100 units, 200 units, 300 units, 400 units, 500 units. It never changes. So the graph is always in a straight line. When you come to per unit, it forms a rectangular hyperbola. If you look into this chart, it is 1,50,000 total fixed cost. For 100 units, 1,500, 200 is 750, 300 is 500, 375, 300. First, there is a drastic drop. Slowly and slowly, they reduce in a reducing way. The reduction is also in reducing way. So this creates a rectangular hyperbola. Okay, this is called rectangular hyperbola. So what is the graph that represents multiple choice? What is the graph that represents during the per unit of fixed cost? That is rectangular hyperbola, MCQ, whether a straight line slope or something. So next comes the variable cost. So variable cost, it is referred to as a product cost. So this variable with each unit of product produced. So product cost, it is varies with each unit of activity. In the variable cost, the cost per unit remains same. Per unit is same. But total cost varies with activity. Remember, with the activity, with the volume. Okay. So now we look here. Variable cost per unit, it is a straight line. 20 rupees variable cost I incur. Okay, first unit, second unit, 20 rupees only. Per unit, 20 rupees only. More than the 10 rupees only. I don't incur more than that. But when it comes to this expenses, like total variable cost, it will be raising systematically. Okay, 1 unit 10 rupees, 2 units total cost 20 rupees, 3 units 30, 40, 50, 60, 70, 80. Okay, systematically it is increasing. So it is a straight line. If it was increasing like fixed assets, like it would have been rectangular hyperbola or like this, anything. So it is coming in straight line. So it is systematically increasing. Okay. The next one is semi-variable, where that is in dual nature. Initially it will be having a fixed cost. So then over and the user increases, it is like variable. Like first 100 rupees is the fixed charge for electricity. So more and more you use, the more and more the price rises. Okay. Like for example, today you run just one fan, and you usually electricity bill was minimum 100 rupees plus 150 20 rupees. But now 2 guests come, they run fan, light, everything. So the extra cost you are incurring, that is variable. Okay, it includes both fixed and variable cost. Segregation of semi-variable. How to find out semi-variable? Like segregate the semi-variable into fixed and variable cost. There are 4 methods. To segregate the semi-variable. First one is graphical method. Second one is high-low method, linear equation method, and least square method. Okay. Focusing on the graphical method, this method accounts for all the available historical data. Based on the historical data, you prepare a graph and you determine the variable at fixed cost. For the step 1, you have to first draw a scattered graph. Okay, that is point down the numbers in the graph. Okay. Second one is put a line where it best fits. So sometimes you find a straight line. What is the characteristic of variable line? It is always straight and drastically, systematically increasing. So there is a straight line, and something you also find a straight. This is a straight slope. Okay, you find the best fit line, and you find the best straight line. Okay, whatever cost you incurred here, this is fixed cost. Okay, whatever cost you incur here, whatever cost I incur over here, this, okay, this is the variable cost. Okay, this is the graphical method. How do you determine it? Okay, high and low method. Here I have taken only 2 examples. If it was like 160 units, 180 tables, 70 tables, 12 tables, 10 tables, the highest is 80, and what is the cost incurred for that? Okay, highest and low, and you need to deduct this total cost. That I will explain you here. Here I have, for the easier purpose, I have taken only 2 difference. So it is where when lot of data is given, here February, March, unit is 75, 65 tables were produced. So here highest is 70 tables, lowest is 60 tables. So putting out to that equation, we are solving this. Okay, because one thing you need to remember, if any changes that happen in semi variable cost, it is because of variable cost. Any changes like semi variable cost expenses for 100 unit, it is 500 rupees, and 150 unit is 750 rupees. Okay, for example, so that 250 unit is because of variable expenses only. Okay, that 250 change is because of variable expenses. Okay, so here the formula we have divided is change in the total cost. Change in the total cost, here how much? 250 it is reduced, right? 250 by change in the total output, how much? 50. When 50, okay, 250 by 50. The same way here, 1900 by 50. So total change in total cost divided by change in the total output. Okay, that time you get the variable cost. Now you need to put a table. Total cost is 1700, 1900. Then variable cost 60 tables into 20 per unit, 70 tables into 20 per unit. You get 1200, 1400. So difference between that is a fixed cost, balance sheet figure. You get the same thing. This is the high and low method. Next one is linear equation method. Linear equation method, y is equal to mx plus c. So what is it? Let us derive. Now we could see that derivation of the formula, total cost is equal to total variable cost plus total fixed cost, right? You're right, right? So total cost is equal to, now if you expand the total variable cost, it is variable cost per unit into number of units, right? Plus total fixed cost. Okay, now here y is the total cost. Y is the total cost. Then m and x. M is total cost, variable cost per unit, and x is total number of units produced. And c is the total fixed cost. The previous tabular form, you put it in equation, you get the linear equation. So when you just apply this, so 1700, okay, was the total cost incurred. 20 into 60 tables, this is the variable cost. Now you transfer it, shift it, linear equation method. When plus, it becomes minus over here. So 1700 minus 1200, the fixed cost is 500. This is what we got over here also. Okay, the method is different, but the answer will always be same. Okay. Oh my God. Then another least square method. Nothing much about this is given in your study material. Least square method, like using simple regression method. So that is, we have used a table. For example, here x number of bottle, y is the cost they have given. This is the question. This is the question. Okay. This is the question. Then we do x square and xy. So we applied the regression formula. We'll just take a screenshot of it. It's not very important, I feel. Okay. Because there is no other example given over here with this formula, with regard to this formula. So next one, the final one is the cost sheet, preparation of a cost sheet, final unit. Here, the importance of the cost sheet. So why do we need a cost sheet? To determine the cost of product. Yes, to determine the cost of final cost of the product, cost of sales, you need a cost sheet. To determine the profit of a company, you need a profit and loss account. Okay, in the same way, to determine the cost, you need a cost sheet. Fixation of selling price. Cost plus profit is equal to selling price. To determine the cost, you need a cost sheet. Without cost, you cannot determine the selling price only. Just the profit you can put it. So you need a cost sheet. Cost comparison. To compare between two organizations, you need your own cost standard sheet and their own, so that you can compare and find for the variances, anything. So cost control, taking the corrective measures during any variances. For that you need a cost sheet. You need to calculate the actual cost, you need to calculate the actual standard cost. Only then you are able to find the differences and variances, and you can implement the cost control techniques. Okay. Decision making. So decide whether to produce, or to buy, or to quote a price. To determine the price of a product or something, you need a cost. You need a cost sheet, and you need a cost. Like this much cost I am incurring, whether I should buy it, whether I should purchase from it outside, whether I should outsource it, everything. That decision is left to you based on that. So looking over that, next one is inter firm comparison. So between comparison between the different departments, you need a cost sheet. You need the value of the cost. Then when it comes to interforms between two companies, you need to calculate that. The next one is calculation of prime cost. Prime cost calculation, first one, calculation of direct material. Opening raw material plus purchase minus closing, you will get the value of the direct material, including direct charges related to the raw material. Okay. So this is the raw materials consumed. Okay, next, add direct labor, direct expenses, you get the prime cost. Simple, direct material plus direct labor plus direct expenses, you get prime cost. Okay, here opening and closing of the raw materials is important. So after that, after you get prime cost, add production overhead to that. Production overhead, all the expenses, factory overhead, factory cost, everything, and adjust the opening WIP minus closing WIP. You will get the adjusted working factory cost. Here you get the works or factory cost. Okay, works or factory cost. After adding the production overhead, next one is cost of production or cost of goods sold. So here the adjusted works factory cost. Okay, that is what we get after adjusting the WIP, opening WIP minus closing WIP, you get the adjusting working cost. You add the administrative overhead. You add the administrative overhead. Administrative overhead, you get the cost of production. You get the cost of production. So add the opening and closing finished stocks. Opening finished stocks and closing finished stock. Why this is the cost of production? See, you produce this many units. So sorry, you produce around 100 units. You produce around 100 units. You use like you acquire 10 units of opening stock. Okay, you keep 20 units of opening stock, closing stock as unused. That time the difference between that is what the cost of production is. Like what to explain in a better way, I mean, you get the cost of production. You get the cost of production after a year. The cost of production does not include. Sorry, I just missed it out. Sorry for the this. Okay. This is the cost of production. Okay. Now you have produced the whole goods. Okay, now you add the previous lying stock, finished goods. You have 100 units of car produced this year. Now you had 20 cars remaining already. So 120. Total you have 120 cars to be sold. But this year you were able to sell only 80 cars. So whatever 40 cars is remaining in your go down. So this 80 cars, whatever is sold, is the cost of goods sold. Okay, this is the cost of production this year. Okay, this is the cost of production. And cost of sales, this is the cost of goods sold. Cost of goods sold. Okay, when you add selling and distribution expenses, it becomes cost of sales. Then you get the statement of profit. In the statement of profit, cost of sales plus profit is sales, that is statement of profit. This one is 5th unit. Okay, a simple way, format of a cost sheet, write the name of the company, cost sheet for the year period ending date and month 31/3/2023 or something. So first one is direct material, direct labor and direct expenses, you get the prime cost. Okay, then they have cost per unit, then do another column, and this is the total cost that you incur, prime cost. And factory overhead, WIP. Okay, work in progress. Factory overhead. So adding factory overhead to the prime cost, you get works cost. So adding administrative cost to the works cost, you get cost of production. Okay, adding finished goods opening and closing stock, adding this one, I'll explain it in a nice way. Okay, as I said, 100 units, 20 opening stock you had, total 120. This is the cost of goods available for sale. You have 120 cost of goods available for sale. You deduct 40 which is not sold, closing stock. You get cost of goods sold 80. Okay, this cost of goods sold. Okay, adding selling overhead, you get the total cost or cost of sales, total cost or cost of sales. Adding that, if the sales amount is given, the balance figure is profit. If profit percentage is given, add the profit percentage, you will get the sales amount. Okay, then if you want a marginal cost sheet, example, that is sales amount minus any variable cost, you get the contribution, and deduct the fixed cost, you will get the profit. Okay, then there are few items not be included in the cost sheet. Okay, first one is income tax, dividends to the shareholders. So these are the finance expenses. These are finance expenses. Premium and redemption of shares, shares and debentures, capital losses, sale of any building or any loss you incur, interest on loan and debentures, and donations, whichever you paid, capital expenditure. Because this they may give you the question, just take a screenshot, by heart it down, and look, not by heart, look, just get an idea which are the costs do not be included in the cost sheet. They make you interest cost on loan borrowed. No, don't include it. Don't include it. Why? There is a reason. Why finance cost related to the company is not considered for as notional cost or something. Reason is not notional cost, or like you could consider it. Like, why you are not considering it? Because notional cost is considered only when the expense is no cash movement is done. But here, even though cash movement is done, it is not directly attributable to the product. It is indirectly attributable product to the product. Okay, interest cost. So donations, capital expenditure, discount on shares and debentures, that could include sweat equity also. Could equal, but commission to the managing director for achieving the sales, not includable. Because his duty, managing director's duty is not to increase the sales. His duty is to look after running of the company. Okay, but commission to the selling agent should be included. Commission to the selling agent should be included, but the commission to the managing director should not be included. Okay, because his duty, primary duty is not selling the products. Okay, underwriting commission, writing of goodwill and preliminary expenses, reserve for bad debt, share premium. These are like you could easily understand, but just have a look at it and never include it. And personal expenses of the owner. So by here we complete the first unit. So you need to just practice few of the very good examples, illustrations given by the institute in the study material. There each and everything are of different variety. There are 8 questions. Solve these 8 questions. It is very important. And I think I have covered major part, not major, almost everything, and nothing is missed down. And always remember, whenever you write in the exam, you remember the keywords. Okay, remember the keywords. This much is not enough, maybe, probably, but this could bring you 100% marks. You could just add 2-3 words or make a sentence, but this is what they bring the marks to you. Keywords is the secret for the clearing the exam. You write on 1 page of the stuff. Okay, that is not important. There will be waiting for 1 word like cost control. Like you may will be implementing various techniques and procedures to reduce the variances. But what is that procedures? That is the cost control. They will be just waiting for 1 keyword. I am not saying they will not give marks for that. They will give the marks, but that is like if it is 5 marks, they may give 2.5. If you add just 1 keyword, that could increase to 4.5 marks, right? So that is very important. Then just to keep trying well, and we'll come up with another video also. And thank you very much, and have a good day. Just prepare yourself well for the exam. So try more and more practicing of this question. This thing, like dividing this, there are 2 types of theory. Like there is one type of theory that you need to conceptually understand. The cost accounting, what is sunk cost, what is historical cost, what is imputed cost, what is opportunity cost, what is cost unit, what is cost object. These things are you need to conceptually understand. But advantages, disadvantages, limitations, this you need to by heart, or you need to just remember those keywords. This is not actually important. Like, I mean, you'll get the questions. You need not understand it conceptually. But if you understand it conceptually, it's better. You don't want to by heart, or you'll remember and tip of hand, you can just write it down. Okay. Here we come with the end of the chapter of 1, the introduction of cost sheet. Thank you very much.